Picture this. You stroll onto a car lot, confident because the dealer can't upsell you with bad credit interest. Or the bank begs you to take its best mortgage rate. Or you snag a luxury vacation on points instead of cash. Sound like a dream? It's just what happens when your credit score stops being your financial shadow and starts being your superpower. Today, we're going deep. Deeper than pay your bills on time so that you can turn a 3-digit number into a launch pad for whatever comes next. We're going to break down the new rules of the game and give you a clear, actionable plan to take control of your future. Hey, I'm Jonah with the Banking Bros. Around here, we make money simple, fun, and most importantly, actionable. And in this video, it's all about your credit score. Your credit score runs a background check on your entire financial life, from a phone plan to your next investment property. The higher the score, the cheaper your future gets. And in 2025, the rules of the game have shifted thanks to new models and new laws and new ways to have your on-time payments finally count. We're moving from a simple scoring system to a more nuanced, trend-based one. So if you're new to this video or this channel, buckle up, because by the end of this video, you'll have a playbook, a timeline, and the confidence to push that score north of 760 without any gimmicks, no empty promises. This is the masterclass your high school didn't teach you. Credit scoring used to mean one equation: classic FICO. It was a snapshot in time, but today, lenders juggle a toolbox of models, each with its own focus. FICO 10T, for example. It's a score that digs 24 months into your trended balances. This means it doesn't just care about what you owe today, like kind of normal. It wants to see how you manage the debt over time, like over a long period. It rewards you for paying down cards month to month and showing a consistent positive trajectory. This is a huge shift from older models. And this fall, FICO is actually even rolling out FICO 10 BNPL, folding buy now, pay later, BNPL, into the mix. So those pay in 4 plans or 5 easy payments at 1099 will finally help or actually hurt you on paper. Meanwhile, you've also got scores like the Vantage Score 4.0. This is a model that has a growing wave of fintech lenders adopting in the last couple years. It leans harder on the alternative data to score thin files, which in regular people talk, it says the habits you build today will be measured tomorrow more thoroughly and more accurately than ever before. Every little move you make is now part of the story. Before we continue, let's actually do a quick history lesson. Credit reporting has been around since 1899, but it was William Fair and Earl Isaac who in 1989 coded the first FICO credit score. Back then, it judged 5 buckets. You've got payment history, you've got amounts owed, length of credit, new credit, and mix. Those pillars still stand, yet Congress, regulators, and technology have chipped away at what's included and what's not. Case in point, actually in January of this year, the CFPB finalized a rule that stripped all medical bills from mainstream credit reports, which is actually a humongous deal. Almost 15 million Americans just got an average 20 to 30 point head start because their emergency room copay or that old medical bill no longer was dragging their credit score down. And this wasn't actually even a choice for the credit companies, right? It was a ruling, and it proves that the system can and will change over time. If regulators can pull negative data, imagine what positive data you can now add to your own advantage. So we've got 10 habits to improve your credit score. Habit number 1, it's your payment history. Payment history actually still controls the biggest slice of the pie. It's roughly 35%. So one late mark sticks around for 7 years. It's a financial scarlet letter, right? You have to wear it on that report that can cost you thousands and higher interest. The fix is really simple, but it's kind of brutal. Never be late again. Set every card to automatic minimum 2 days before the due date. Then log in weekly and kill the balance entirely, right? This 2-step process can ensure you're never hit with a late fee or a late mark on your report. If cash flow is really tight, split pay the statement. So half when the charge posts and then half right before the closing date. This way, when the Bureau snapshots your report, right, it's got a low balance. FICO 10T we talked about earlier loves that downward pay down, downward trajectory. it often bumps your score faster than any other single tactic. So it's really all about consistency and then showing the lenders that you're a reliable borrower. Habit number 2 is master your utilization. So here's what I mean. Amounts owed, like how much is owed on each card, accounts for about 30%. But it isn't actually just what you owe, it's what you owe compared to your credit limit. This is actually called your credit utilization ratio. So you've got to think of your utilization as your financial Instagram, right? You got to keep it polished, and then lenders assume the rest of your life is too polished, right? Under 30% is really respectable, and under 10% is the elite category. So the cheat codes are simple, right? Pay before the statement closes, not just before it's due. So the reported snapshot is really tiny. You should also ask for limit increases at least twice a year. Most fintech apps let you do it in-app without a hard pull, and then you can shift the large purchases to cards with bigger limits, so that way you dilute like spikes in the utilization. So here's an example. If you have a card with $1,000 limit and you put a $500 purchase on it, that's 50% utilization. You don't want that. But if you put that same purchase, $500 purchase, on a card with a $10,000 limit, that's a 5% utilization. So it's actually all about perception, and we need to use that to our advantage. So that's habit number 2. Number 3 is that age matters. And no, I'm not talking about how old you are, right? The average age of your accounts is like fine wine of credit. It's a measure of stability and longevity. So here's what you actually shouldn't do. You shouldn't ever close your oldest card, even if it's got an annual fee. Just downgrade the card to a no fee card, or just way lower, whatever the credit utilization's offering, right? Closing it can hurt your average. It can hurt your utilization. If you're brand new to credit or you're just starting out, you can piggyback on a trusted relative's seasoned card as an authorized user. I've heard some really cool stories about parents doing that for their kids. So you won't actually touch their line, but you do inherit their age and their limit, which instantly lowers your utilization because it adds years to your profile. Just make sure you tell mom or dad to pay on time, or you both go down together, right? It's an easy and powerful way to build a positive history without having to wait years. You ready for habit number 4? You've got to curate your credit mix very carefully. Credit mix makes up about 10% of your credit score, yet it's often the tiebreaker between good credit and excellent credit. Lenders like to see that you can handle different types of credit responsibly. So installment loans, so you got to think like auto loans, student loans, small credit builder type loans. You got to combine those nicely with revolving credit cards. Revolving meaning you pay it off every single month. You can even self-fund the installment sign. Many credit unions now offer, I think they call them share secured loans, where you borrow against your own savings for 12 months. So yeah, you pay a tiny interest cost, but you're basically buying positive payment history on a discount. You're using your own money to build your credit profile. And if you're really worried about your credit and making sure that your score's high, I think it's a small price to pay for the huge long-term benefits. Habit number 5, you've got to space out your new applications. Each hard inquiry can actually shave 2 to 5 points off your score short-term. But what really hurts is opening 5 cards in 5 months. Don't do that. Lenders read that as a desperation and a sign of high risk. So you've got to apply for new credit only when it upgrades your strategy. Bigger limits, premium reward, 0% financing, 0% interest before the promo period ends, stuff like that. Then you have to pause. Don't do it anymore for about 6 months. You've got to let your score recover. The average age of your accounts settle and your limits season. So you can't actually just chase every offer you see. I know you're getting mail and you're getting emails, but you got to be strategic. You got to be intentional. Every application should actually have a purpose. Ready for the next one? You've got to leverage alternative data. Now, this is where it gets fun because of some of the new rules that have recently come into play. 38% of Gen Zers don't actually have a traditional credit card. So if that's you, it's time to start reporting the bills you already pay. So you've got to use services like, or if you're already using services like BoomPay, Level Credit, Experian Boost, that can actually push your on-time rent or utility payments to TransUnion and to Equifax. It gives thin files a jumpstart and a score when you did not have one before. And as we discussed, buy now, pay later providers. So I'm talking Affirm, I'm talking Klarna, I'm talking Apple Pay. I think they call it Apple Pay Later. Those are soon going to put their data into the FICO score as well. So it can be a double-edged sword. On-time installments really, really help. But if you miss a payment, that can sink you fastly. So you've got to treat these buy now, pay later services like a credit card that you have to pay in full and on schedule every single time. It really is just a game of consistency here. Next habit, you got to clean up those derogatory marks. So here's what I mean. Collection accounts. Those are like kryptonite. If you're Superman, this is terrible. But 2025 and some of the rule changes really handed you a lifeline. So under the new CFPB rule, medical collections, these are medical bills, no matter the amount, cannot appear on mainstream lending reports. So if yours still show, go check it, right? Get on Credit Karma and check. You've got to dispute it. The bureaus actually have to delete this. So it's the law. Non-medical collections, you can negotiate, right? If they call it a pay for delete. So you can get a letter from the agency agreeing to remove the trade line once the debt's settled. And remember, once the debt's gone, the scoring models actually forget it a lot faster than you think, especially with the new trend-based models. So don't just pay it, you've got to actually call afterward and get it deleted. And number 10 is something I bet you were not expecting, but I think you've got to supercharge your score with the save and spend system. Let me explain. So instead of letting a maxed out credit score or a maxed out credit card choke your score, you can use actually a well-structured whole life insurance policy, part of what we like to call our save and spend system. So here's how you do it. You actually just borrow the cash value of your life insurance policy. You can use that money to pay off your credit card. Then you get to actually pay your policy back on your own terms. You're not worried about banks or financial institutions saying you have to or do it this much or here's how much interest. You just don't have to worry about it. Meanwhile, while you're doing that, your cash value inside your policy where you got the money from keeps growing and your credit utilization drops to 0. Remember, we need to be under 10% and your score goes, that's right, up. You're not just fixing a problem, right? You're making your credit profile work for you. So here's some things you need to know. FICO studies show that their new 10T model is going to outperform the classic FICO by flagging 18% more future delinquencies. So again, that's good for them, not so good for us. Lenders love sharper risk tools. So expect a big adoption of this. Expect it fast. That Vantage Score 4.0 I talked about earlier, it keeps pushing inclusivity. It's giving millions within these thin files a shot at the financial system, which actually can be good for you. That's your buy now, pay later stuff. Regulators have been hinting at more negative items disappearing. So like settled medical debt, think that. Maybe even paid off collections, that'll be good. The takeaway really though is you've got to build good data now because tomorrow's algorithms or the rule changes that they place the next time a bill's passed is going to spotlight everything that you've done right, but it'll put an even bigger spotlight on things that you've done wrong. The system is changing. It's changing right now to reward positive behavior, and I just think you should be ready for that. So, all right, here's your marching orders. Tonight, I think you should pull all 3 of your credit reports, okay? You can get all 3 of them free at annualcreditreport.com, all right? So then you should circle any errors. Remember, if it's medical especially, those have to come off. Tomorrow, you should automate every single credit bill that you've got. If it was on that report, it should be automated to make sure you're not missing a payment. Missing a payment will kill you. By next week, you should probably request a limit increase on your oldest card, and you should schedule a chat with our team about integrating the save and spend system so you're never hostage to these high interest debts anymore. This isn't just about good credit scores. It's actually about financial freedom. We want you to have the freedom to be able to make the financial decisions that you need to. So if this breakdown in my habits was the masterclass, was the video you needed, here's what you got to do for me. You got to smash that like button. Then you got to share the video with one friend whose score could use some love. Call them out in the comments, all right? And then subscribe to our channel so you don't miss our next deep dive. And when you're ready for your personalized game plan, like I mentioned, the link's in the description. We'd love to talk with you. I'll see you on the inside. And until then, keep stacking those points and banking on yourself. Peace.